Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, January 31st, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
It is always good to have you. So Sekido-san, at the end of the year, you put out a piece entitled Tokyo Repo and JPY, BoJ incentive interest rates via JPY repo market affecting JPY yield curve shape. Really interesting piece that analyzed the structure of the Tokyo repo market, including the cross-currency repo aspect to it. We just never got a chance to discuss that on the podcast, so I was wondering if you could go back and summarize the key points of the report for our listeners.
Okay, thank you. According to the BoJ statistics on securities financing transactions in Japan, the Tokyo repo market remained highly liquid, although declined from the peak of the COVID crisis. Japanese investors, especially Japanese banks, including regional banks, have stayed more active than their pre-COVID crisis level. And overseas investors, non-residents, were active in cross-currency trading during the height of the COVID crisis, especially dollar yen, not against other currency pairs. In our view, global bond investors use their surplus dollar funds as a tool for active dollar yen cross-currency arbitrage trades, and an interdependency between dollar and yen markets grew tighter. Despite the risk of cash bond deliveries in repo trades amid market stress during the COVID pandemic in 2020, global bond investors were seeking profit opportunities, and non-resident became active in yen cross-currency arbitrage traders in Tokyo.
Yeah, so interesting development in the market, and that was catalyzed by the COVID pandemic that persists to this day. But I guess though, as a follow-up to that, there've been a number of changes to BoJ incentive deposit schemes as of late. So I guess I'm curious what's likely to change in that market.
Okay. Going forward, the BoJ will likely maintain its pace of monetary expansion in line with, firstly, the lending support program, secondly, climate change countermeasure operation, and thirdly, overshooting commitments while revising COVID countermeasure operations. Due to yen incentive deposit rates cut from this April, Japanese regional banks will be forced to deploy yen repo trades. The BoJ has been encouraging Japanese regional banks to bolster management on their own without relying too much on yen deposit incentives, like with COVID countermeasure operations. The yen current deposits with 0% interest at the BoJ will likely increase further. The BoJ will probably promote use of climate change countermeasures, which will supplement the growth space fund. This is because ESG is a big issue now. Moreover, the changes to COVID countermeasure operations by this September will be closely watched.
Yeah, ESG, huge focus for a ton of financial institutions across the globe. Japan and the BoJ, obviously, no exception there. Speaking of the BoJ, a few weeks ago, the BoJ concluded its January policy meeting. As we discussed, just before the podcast, there have been some developments in the wake of that meeting. Why don't you take our listeners through the key takeaways of the BoJ meeting, but as they pertain to these more recent developments?
The BoJ noted in the lead statement of the current situation on economic prices and activities in Japan in its outlook report that a pickup in Japan's economy has become evident. This was a positive revision from the December statement and the October outlook report. Also, the BoJ noted that inflation expectations have risen moderately. The BoJ pointed out that risk factors for inflation include corporate price-setting behavior, and future developments in foreign exchange rates and international commodity prices, as well as the extent to which some developments will spread to import prices and domestic prices. The BoJ central bankers stressed out the present upside factors in both growth and inflation. Governor Haruhiko Kuroda flatly rejected market speculation that the BoJ would begin to discuss a policy rate hike, commenting that there would be no change in yield curve control operations. We are also struck by Governor Kuroda's apparent skepticism about achieving the inflation target. In our view, the BoJ is unlikely to make any changes to its yield curve control operations target during Governor Kuroda's term in office, which ends in April 2023. However, on January 26, Prime Minister Fumio Kishida in a full House Budget Committee meeting denied that the government and central banks are engaged in modern monetary theory and that fiscal policy based on the BoJ underlying JGBs has caused a loss of confidence in the country. We have to carefully watch both Prime Minister and a BoJ governor, especially after the upper house election on July 10th. The government is now more focusing on fiscal consolidation side.
Interesting. So, obviously no change in party, ruling coalition, and with Kishida at the helm, but perhaps a little bit of a change in focus. Interesting that despite, Governor Kuroda's, relatively, reassuring comments, JGBs continue to sell off. I think, the close of the 31st, I think 10-year JGBs closed at 17 basis points, touched as high as 18 and a half, so the mark, and that's, highest level since 2016. So he might have a little bit more reassuring to do, I suspect. So let's see here. I think we're about out of time, but I don't want to finish things up without getting you a chance to take our listeners through your outlook across yen rate, spot dollar yen, and yen basis. So please go ahead.
Okay. The January FMC has indicated that it plans to raise FF policy rate in March and start tightening its balance sheet thereafter. Chair Jerome Powell did not reject the possibility of consecutive rate hikes this year, and he also mentioned cutting the Fed's balance sheet considerably. His stance left an inflation, and a dollar yen rose to the upper 114 level. Over the near term, we expect a rallying trend for dollar, and in line with January FOMC. If upcoming US data are positive, market speculation over faster pace of rate hikes will likely support the dollar buying. But a dollar rally could stall if the situation in the Ukraine causes US stocks to drop. There could also be yen repatriation flows and an export recovery for Japan. We expect a neutral bias for dollar yen, with trading in a 2 yen range between a slightly higher level 113.75 to 115.75. The yen swap rate curve has risen slightly, especially the belly. The yen rates are likely to test room for correction following the FOMC January statement. Recently, the JGB yield curve is rising and steepening. We change our view for yen rates from neutral to an upward bias. The yen basis curve is widened, especially the long end. Ministry of Finance weekly securities flow data showed that the Japanese unloaded a net 353 billion yen of overseas securities, and foreigners dumped a net 1.9 trillion yen of Japanese securities in the week of January 16th to 22nd. Japanese cut their overseas asset positions out of the January FOMC meeting by 159 billion yen of short-term bonds, 107 billion yen of medium to long-term bonds, and 86 billion yen of stocks and investment fund holdings. Then foreigners unloaded a large amount of Japanese medium to long-term bonds by a net 1.7 trillion yen and short-term bonds by a net 229 billion yen. Both Japanese and foreign investors cut their interest rate risk and reduced their cross-border positions ahead of the January FOMC meeting. Over the near term, yen arbitrage flows will likely die down during Asian trading hours ahead of the Chinese Lunar New Year, though the US and European investors actively rebuild of their JGBs. We revise our view for yen basis bias from neutral to tightening.
Got it. So neutral on dollar yen, negative on JGBs, and looks like you're expecting some cross-currency arbitrage buying from the overseas community in JGBs to contribute to some tightening of the basis.
Yes.
Really good stuff as always. Sekido, thank you for joining us.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts, and reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.